Welcome to Selling on Giants, the podcast that helps e-commerce sellers scale smarter and grow bigger. Today, we have an exciting episode featuring Blake Hutchison, CEO of Flippa, the leading platform for buying and selling online businesses. Blake brings unparalleled expertise in online business transactions, AI-driven buyer matching, and maximizing business exits. In this episode, we dive into how to prepare your e-commerce business for sale, tips to get the best valuation, and why online businesses are emerging as a new asset class for investors. Whether you're just starting out or looking to exit your business, you'll gain actionable insights to make smarter decisions. Let's jump in and hear from Blake about how to unlock the true value of your e-commerce business. In this episode, Blake shares some actionable insights for e-commerce entrepreneurs on how to prepare, value, and successfully sell your e-commerce business. Here are the key takeaways for sellers looking to scale and exit. First and foremost, understand the value of your e-commerce business. Business valuation is determined by financial health, that's your revenue, your profits, your cost, product quality, refund rates, and customer acquisition channels. Unique, higher valued products with strong operational processes tend to command higher multiples. Number two, start preparing early with best practices. Entrepreneurs should document their business operations with clear standard operating procedures or SOPs, maintain financial hygiene through cloud accounting tools, and ensure consistent operational efficiency. A well-documented business increases buyers' confidence and therefore will increase your valuation. Next, be aware of your buyer types. Sellers need to consider who the buyers might be. Financial buyers looking for ROI, strategic buyers aiming to expand their portfolio, or private equity firms focusing on a niche. Understanding buyer intent can help you position your business effectively. Next, the process to sell on Flippa. Flippa offers a seamless end-to-end solution from valuation tools and AI-driven buyer matching to integrated due diligence support and legal frameworks. Sellers can connect data, Shopify, Stripe, QuickBooks, etc., and leverage certified M&A advisors to manage the transactions. And finally, the future of e-commerce exits. AI will play a critical role in streamlining valuation, buyer matching, and contract creation, making M&A transactions faster and more efficient. Blake also highlighted Flippa's upcoming investment product, enabling e-commerce businesses to raise growth capital through an accredited investor network. Ready to learn how to scale and exit your e-commerce brand? Let's dive into the full interview with Blake now. Hey, Blake, thanks for being here today. We're excited to have you on the podcast to talk about building and selling e-commerce businesses, a data-driven strategy. Before we jump in, I'd love my audience to get to know you a little better. So can you tell me about your journey in e-commerce and marketplaces and really how you ended up being the CEO of Flippa?
Yeah, awesome. Will, thanks for having me on the show. It's going to be a great chat. A couple of different, I guess, stories for you to set the scene. So I ran a big e-commerce luxury online travel agency called Luxury Escapes. I joined that business, running that business for the founder, and took it from around $70 million to $330 million. So that was, I guess, a very substantial foray into e-com. I had a marketplace which was selling specialty goods,
Mm.
essentially enabling traditional main street retailers to set up shop fronts and sell their specialty goods to a highly curated audience. That was my second foray into e-com. And of course, right now here at Flippa, I get to watch e-commerce business owners exit, and in the case of investors, acquire those businesses. So we have unique insight. We see the data. It's a really fun space, getting to watch people who have built so much into so many great businesses, watching them sort of exit. So that's really cool. Ultimately, I got my start here at Flippa having used the platform. I was a entrepreneur. I did exit my own business using the Flippa platform. So that I guess gave me a unique lens into how the platform works, as well as what the experience is emotionally. as well as financially going through that exit process. So hopefully that sets the scene and provides a little bit of context.
That definitely does. What's the most exciting part of your day generally in your current role at Flippa?
Look, the most exciting part of the day is when you see a deal go through, frankly. It's exciting for three parties. It's exciting for the entrepreneur who's probably just had their first exit, most likely seeing a check hit their bank account of some scale that changes something within their life. Sometimes it is life changing, sometimes it's car changing, sometimes it's house changing, depending on the size of the transaction. So that's really fun to watch. It obviously also impacts the acquirer. That's typically an investor or a first time acquisition entrepreneur. So they're on a new journey, and we love seeing that play out. And then, of course, it impacts us. That's how we derive our revenue. So that's clearly the most exciting part of the day when someone completes a transaction and goes on to that next part of their life journey.
That is exciting. What a journey to be on. Here, Bella Vix is an agency I run, and we help them with sales and scaling. And we have seen a few entrepreneurs exit, and it can be life-changing for sure. And it's such an exciting experience as they put their heart and soul into these businesses, and then what it's like to turn it over and let go, and then, almost the recovery process that a lot of entrepreneurs have to go through when their purpose changes because now they're no longer strapped to that business. So you're really in an interesting position being kind of the mediator for a lot of these deals.
Yeah, it may be worth actually pointing out that the average business that sells on Flipper is 4.5 years old. So that gives you some
Oh,
sense of
interesting.
where the business owner is in their life stage and their business maturity. And so, they've been doing this for a long time. They've put a lot into it, and so it is a really, really substantial change in their life that they're about to go through.
Beautiful. Well, I'm excited to jump into our main topic, which is building and selling e-commerce businesses. We do a lot of the building, but not a lot of the selling. So it's a gap in my knowledge, and I'm really excited to dive in with you today, Blake. So to kick it off, I'm going to start real broad. For those new to the concept, what does it mean to sell an e-commerce business, and why might somebody consider doing it?
It's a really, really good question that we get a lot, and you know what? It's analogous to any other asset class, really. Someone will sell a house. Either they need the money, so there's liquidity in that house. Maybe they want to downsize, or maybe they want to get a bigger house.
Mm.
So there are, obvious reasons why people will pursue existing asset classes today. Selling an e-commerce business isn't that different, actually. I've built it to a certain level or scale. That could be small, medium, or big. Here at Flipper, we'll do deals as low as tens of thousands, and we'll do deals up to around 10 to 15 million.
Wow.
And so they do come in different shapes and sizes, and they are assets. They are businesses. They are revenue generating. They're cash flow generating. There's operational history. There's a customer base. All of these things that go into an e-commerce business that we see as the operational day-to-day and lifeblood of a business, other people see as an asset.
Mm.
And they see that as a tradable asset. They see that as something that they can acquire, turn into something that is better than it is today, something that they can accelerate, something that is strategically relevant for them.
Mm.
And so a business owner would want to sell because they want liquidity. A business owner would want to sell because they want to go on and do something else. A business owner would want to sell because they want to take the proceeds of that exit process and deploy those proceeds into another asset class.
Mm.
Perhaps it's a home. Perhaps it is stocks. Perhaps it is a bigger business or another business that they have that they believe that they would like to reinvest into. So the motivations are actually, very logical, never sinister, and it's really just a function of liquidity.
That is really interesting. And what I like here, you kind of broke it up. There's a lot of different scenarios. And what I take away too, it's like some of these people have a very holistic view on how they view business. And for those of our listeners, I think what's clear is that they're not generally attached to the business. It doesn't mean that they weren't passionate when building it, but they understand they may have to let that baby go and and move on to something else in order to build themselves professionally and personally. Um, in terms of different ways to sell or to even identify, like if I was going to sell my business, what are the mediums somebody might do it? Is it brokers, marketplaces? Are there like what are traditional ways that somebody who's interested in selling or buying might start researching this topic?
Yeah, so generally speaking, it will start with some level of intent. So I have an interest in selling my business. What might it be worth?
Hmm.
Uh, and generally speaking, that will then give them some sense of whether it's even possible. So have you built a business to a level that gives you the outcome that you're after? And of course, then it comes down to whether someone has realistic outcomes. But once they ultimately have a number in mind that is hopefully being driven off some data and therefore some clear objective viewpoint, then they can pursue, I guess, one of probably three different channels. So channel A would be kind of friends and family. Take the business out there and look to see whether there's someone in their immediate network who might be interested in taking it over. And that's actually pretty common, not as foreign as you might expect. It does happen that way quite often. The second pathway would be a standalone business broker. So someone who brokers the sale of businesses, in this particular case, an e-commerce asset. And then thirdly, I would say a platform um, like Flippa, where it is a combination of the advisory capability of a broker, as well as the power of the matching algorithm that is a platform, and in this case, Flippa. So they're kind of your three main pathways. I suppose you do get environments on you know things like Twitter and Facebook where people will make it abundantly clear that they're in the market to exit or in the market to buy, and there probably is some sort of community aspect to exiting that is helpful to some people, but the vast majority will go through a broker or a platform.
I could see that. Just somebody says like friends, families, and fools, like your first investors, which makes a ton of sense. A traditional broker, which probably has some level of expertise, whether in a category or with that specific type of business. And then a marketplace like Flipper, where the opportunity, you're essentially advertising on somewhere where people have intent to buy. So you get the difference is that you guys have an ecosystem. The broker probably has a network, and friends, family, and fools is just like people you're immediately connected with that may be interested based on your interactions. Is that kind of a fair summary of? And then the social you mentioned, but that seems like you probably need a pretty good network for that to actually work.
Yeah, I think that's a great summary, Will. I mean, ultimately, for those people who have um, a a friends and family network with the means
Mm,
and the interest, clearly that's the fastest and most efficient pathway, albeit you should still then get advice around the legals and the framework for selling. But that's clearly the most efficient pathway. If you've got a friend who says, I'll buy it from you, well, why wouldn't you do that deal?
yeah,
Um,
exactly.
and a platform is really about access. It's
Mm,
really about saying, I'm an e-commerce business owner. I've built something at scale. I now want to see what the universe of buyers looks like for
mm.
my asset to drive competitive tension. And that universal access to buyers is a really critical part of what a platform will offer.
That's beautiful. Let's dive a little deeper. I really like to understand valuation and readiness. So we have a variety of listeners, some just starting their e-commerce journey and others that have been doing it for a while. And maybe they're looking to exit, whether it's age related or to just want to move on to something else. So what factors determine the value of an e-commerce business and how can sellers maximize their valuation before selling?
So we're looking at the health of a business and we're looking at the financial and operational health of a business. So financial will relate to the usual things, revenue, the cost base, and then the net profit, or what we might call adjusted net profit after we take out non consequential items. The key thing related to e-commerce then is, of course, how you derive your revenue does give the potential investor some sense of the asset's health, and therefore that will go into valuation as well. So what are we talking about there? Well, if you're generating lots of revenue, but the product is not unique,
Mm.
well, that will therefore play into your valuation, because then you are just competing for the same customer as everyone else, and
Mm.
therefore your cost of acquisition is likely high, and therefore the competitiveness of your revenue generating capability is also challenged. So that will go into it. Average order value. If you're selling lots of $5 trinkets, it's very difficult for an investor to imagine running that business to substantial scale, because the unit economics on a $5 trinket won't be as good as the unit economics on a $500 item
Mm.
typically. So then they will, of course, look at that average order value. They will look at refund rates, because that determines customer happiness. So if you're selling 100 trinkets, but you've got a 40% refund rate, that would suggest the trinkets are garbage. And so, and therefore, that will impact your value. So a lot of people will come in and they'll say, but what do you mean I'm doing $2.5 million in revenue? Well, so that's great, but $2.5 million of revenue is then substantially impacted by a 40% refund rate. And then, of course, from that perspective, the investor starts to lose confidence in the quality of the product, and that therefore will play into valuation. Long story short, what you then have is a set of benchmarks,
Mm.
and those benchmarks happen across the type of e-com. So do you sell on Amazon, or are you direct to consumer?
Mm.
Are you dropship, or are you warehousing yourself?
Mm.
Uh, Category. Is it fashion? Highly competitive, therefore a bit challenged. Is it furniture? If furniture, is it high-end furniture that's bespoke, or is it furniture you can buy from Alibaba and retail like everybody else? So these will all come in. Then geography.
Mm.
So the buying power of an American is different to the buying power of a Southeast Asian. That's unfortunately just the reality. And
Yeah.
so therefore, where your customers originate.
Mm.
The cost of acquisition. What channels do you use? Are you strapped to the hamster wheel that is Facebook?
Mm.
And do you not have any ability to win your customer through any other channel other than buying it? These will all be benchmarked. And as a result of that benchmark, we will then give you an indicative valuation programmatically.
Wow.
Of course, for all of the American listeners, that's the equivalent of like a Zillow's estimate, right?
Mm.
It's based on a comp set and a data set that gives us and our algorithm quite a high degree of confidence when we predict the value of a business.
Wow. That's really interesting. And if I hear it correctly, it sounds like it's your EBITDA, it's your financing, it's the quality and uniqueness of the product, and it also sounds like it's barrier to entry. Manufacturing, wholesale, manufacturing and warehousing your product requires finances where somebody who's drop shipping, that's a lower barrier to entry, so therefore that's gonna negatively impact your valuation. Is that
Yep,
am I on pretty much on?
absolutely. And then there are some unknown factors. So, do we meet a financial buyer on the platform, or do we meet a strategic buyer on the platform?
Hmm.
So, if you're a baby retailer and you happen to come across the Toys R Us CEO on the Flippa platform, then clearly the Toys R Us CEO on the Flippa platform is thinking about the acquisition of that baby retailer differently to a financial buyer who is simply saying, I have $1 million to spend. I'm looking to buy something at a maximum of 3.5 times profit multiple because I want my return in year one to be X.
Wow.
So the there is variability in valuation and price, eventual enterprise value, on the basis of who the buyer is.
That's interesting too. And I didn't even think of that. An investor who's looking to get in and out, they're looking to turn that over real quick. Where somebody, the Toys R Us guy, CEO is a great example. They understand what it takes to run a toy business and build a portfolio. And we work with a lot of private equity companies that they tend to be really specific in a niche. They're doubling down in supplement or something about beauty. And once they kind of figure out that formula, I notice that they'll buy more brands that align with that mission, and then they'll grow that way, which sounds like that's kind of the two scenarios or of the investment side or the buying side.
Yeah, and it's really important that those entrepreneurs who are looking to exit start to imagine the buyer for their business and pretend that they are the buyer for the business and
Oh.
start to pick holes in their business from the perspective of a buyer and pretend they are private equity, pretend they are strategic, pretend they are a high net worth or family office thinking about it differently through those lenses.
That is so funny. I'm part of an entrepreneurial networking group, and we're actually doing that activity as we speak. We're pretending that we're getting ready to sell our agencies, and we're pretending to be a buyer. So that's so funny. It's amazing the things you hear over and over again. So very strategic. On that note, like what type of timeline should I be looking at if I'm an e-commerce brand? Like, so you said typically somebody's about 4.5 years in the business. Are there scenarios where it might be earlier? When should I start preparing? From day one, should I be thinking about selling, or does it come gradually? Like, what's been your experience with e-com brands, kind of timelining and knowing when they should start getting ready to get valuation in place if they're considered selling in the future?
So, great operational practices will tend to be a good way to think about setting yourself up for exit. So, it's difficult. There's this message out there in the marketplace right now, always thinking about the exit when you set up with an exit in mind from day one. That's very hard for an entrepreneur to get their head around. At the end of the day, first I got to make enough money to put a roof over my head or ensure that my business is viable enough to continue on. And of course, people are in different circumstances, but regardless, everyone wants a viable business. The best way to think about a viable business is to think about it through good operational practices. So if you think about having an SOP, standard operating procedure, for the way in which you order your inventory, order your stock, land your stock, warehouse your stock, and then the logistics, the last mile delivery framework that your business operates on, right? If you think about all of that and you document that in an SOP, that's the exact document that a potential acquirer will want for your business when they consider taking it up.
Oh.
If you think about financial hygiene, if you use cloud accounting software, it will give you that transparency, that visibility as to your revenue, your cost base, ultimately your profit position, as well as the balance sheet. That's the exact same financial documentation that an investor will want to see from you as you're pursuing an exit. So the best way to think about an exit is to think about best practice
Mm.
running a business. If you hire 10 staff and you don't have policies around leave and policies around sick days and policies around the time they should get into the warehouse, the time they should leave the warehouse, all of these types of things are the exact same things that acquirers will want to see in that business. So the best way to think about an exit is to think about best practices in the operational hygiene of your business.
Interesting. It sounds like documenting almost anything that could be processed, anything that you could hire somebody else to do, from reporting to even just the functions of how you pull an order, you get things manufactured, you do your marketing and advertising. So seems like it's systemizing your business is kind of the first step if you're
Yeah.
considering going online and selling.
So one of the things that we see is that often an e-commerce business owner at seven figures doesn't actually know how they got to seven figures.
Oh, really?
Yeah. And they don't know um, their acquisition funnels well enough. They don't know what their average order value is. They don't know what the satisfaction levels of their customer base is. So it's they've got a good product. They've found a segment in the market. The customer base has responded favorably to that, but they just don't have the objective level detail as to
Mm.
how their business runs and how it got to where it is. And that can ruin an exit process.
Wow. What's typically is it based on the entrepreneur, or is there a certain revenue threshold that somebody will hit that you find that they're going to be much more organized? Is it eight-figure businesses will have a marketing department and they'll have a lot of systems in place? Or have you seen some of these smaller sellers, maybe $1 million, that were really meticulous on how they processed? Or is it a gambit across the board?
Across the board. So So size, I'm being a bit flippant, but size doesn't equal capability.
Oh,
Um, we see, some six-figure business owners who are meticulous. They've had incredible e-commerce operational history. For whatever reason, that particular product or set of products that they're selling hasn't hit the mark, and it hasn't been as well received as customers of, say, a $5 million business,
hmm.
where that business owner isn't as meticulous, barely understands how they got to where they got to, but their product and their product selection is outstanding, and their pathway to growth has been easier.
Hmm.
And so it's actually, we find that e-commerce capability um, and the nous of the entrepreneur is often not related to size of business.
That's pretty interesting. I would have thought the more volume you have, the more you would need to be organized in order to continue to grow it. But I guess to your point, you could just have stumbled into a niche, have a good product and a really good customer base, and that could be the rocket ship that takes you to the next level.
Yeah, these businesses take capability, they take hard work, but you and I both know that in all great businesses, there is some element of luck.
Hmm.
Uh, were you first in? Were you second in, but the incumbent stumbled? Um, did you find a niche that wasn't popular but that suddenly becomes a hit as a function of some kind of celebrity endorsement? There's lots of different factors that go into what makes a business successful, and a lot of its capability, and sometimes there's a bit of luck in there too.
Yeah, I can agree with that. Luck does play a lot. As you know, you make your own luck, but sometimes luck just happens. On that note, so let's just play a little role playing. I'm an e-commerce brand. I have my books in order and I'm looking to sell. What's the actual process if I'm going to list on a marketplace like Flippa? What is that process? Like how do we work together? How do we get
Yeah.
started? And what are some things I would need to know as an e-commerce business interested in selling my brand to a potential buyer?
So if I was an entrepreneur and I owned a good quality e-commerce business and I was looking to exit, I would start to browse the marketplace and get a feel for what others are doing on the platform, how others have been set up to succeed, the valuations, and how they are positioning those businesses to exit. I would then get an indicative valuation, and the best way to do that is through Flippa's valuation tool. That will give you an indicative valuation and give you some confidence to exit at a price. Next up, we have, I guess, what would be analogous to, say, the Airbnb onboarding process, like setting up like a host. We have a 10-step onboarding process, and we will connect you to your data sets. So
Mm.
we connect to QuickBooks Online, Xero, Stripe, Shopify, BigCommerce, Magento, Amazon, Walmart. All of these data connections are available to customers on the Flippa platform. You connect your data, we'll pull down the data, we'll rationalize that, we'll pick out some insights, your average order value, your refund rates, the number of customers you have, the number of the range of product you have, etc. And we will start to organize that in a way that makes sense to you as well as to a prospective acquirer.
Hmm.
We'll then ask you to tell us as much as possible about the day-to-day runnings of the business. Now, once you've done that, we will match you up to a world-class advisor, certified M&A expert from around the world, depending on where you're based in the world.
Hmm.
And they're going to essentially consult to you. So they're going to say, look, your information memorandum is now available. It looks good. It presents in the way that we believe is the best to represent your business. And now the Flippa matching algorithm is going to take over. Are you ready to get started? Because once you say yes, there's going to be a flood of inquiries coming in. Of
Hmm.
course, the M&A advisor is going to triage those for you, but ultimately, you're going to need to be available to go through that exit process.
Hmm.
And so there is that kind of sign-off point where we say, as the M&A advisor, we believe you're in a good position now to exit. We believe that there is a good number of buyers who will be a very, very strong fit for your business. Are you ready? Yes, I'm ready. At that point in time, what is going to happen is that Flippa's AI matching will take over.
Hmm.
And that's going to look for buyers that have a mandate and a bio that the matching algorithm believes and that it's seen historically will be a good fit for your business.
Mm.
Once those matches come in, and that does happen very prolifically, we do 20 million matches a year, 425,000 weekly, you will start to get a sense for how interested the marketplace is. And this all happens privately in a confidential environment, of course. The buyers must sign an NDA. Their bios must be complete. Their mandates must be complete. Of course, they get vetted by the M&A expert as they enter the platform. But once a certain number of matches will happen, there's a feedback loop where we're letting you know, obviously, if there's any initial strong engagement, whether anyone's submitted a LOI, that's a letter of intent. Of course, that happens on the platform as well. Ultimately, there's then a set of discovery calls between the entrepreneur, the M&A advisor, and of course, any of these buyers that have been matched up to the opportunity. Finally, to fast forward a little bit, back and forth negotiation, and then what is typically an asset purchase, but it could be a stock purchase, so a share purchase, a share sale of the business. But most commonly, just to remove the risk of legal liability, buyers will prefer an asset sale. Not always the case, but most common. Again, for most deals, that will happen on the platform. They'll issue the asset purchase agreement. Then we have integrated Dropbox sign. The entrepreneur will log in. They'll execute. At the point of execution, and of course, due diligence is happening through this period of time too. That tends to be fairly asynchronous. It's happening throughout the process, where some buyers will prefer to do that all upfront post asset purchase agreement signing.
Now, do
We
you
then
guys
move.
have a due diligence? Because I was curious about this. What does it look like? And does due diligence happen on both sides? Like, are you mediating both sides and helping them do it, or does the buyer have their own legal
Yep.
team that's doing due diligence, and then the sellers require could you just walk me through what due diligence looks like and what sellers should be aware of if they're considering just to have all their peas in a pot, if you will?
Yes. I would say that it should happen on both sides. It typically only happens on one side of the equation.
Mm.
It's a little bit like a job interview, right? So it tends to be that the candidate is less good at vetting the boss and or the company that they're about to go and work for. This is exactly the same in M&A. It tends to be that the target company, the company that's being acquired, is less good at vetting the acquirer. The acquirer, on the other hand, yes, they do, in some cases, an intense level of diligence. So that can work in a few different ways. One, depending on the size of the asset, Flippa does have all of those data integrations and therefore can provide an open book, for want of a better description, to the buyer. Two, they can engage with Flippa's in-house diligence team, who will basically write a report for them based on the accounting state, the operational state, but they won't do legal diligence. Or thirdly, they do it themselves or hire a diligence expert, either a resource within their team, a third party. So we want to be as flexible as we possibly can as a platform. And therefore, the choice is the buyers, so long as the seller, the entrepreneur, is content and okay with that. That diligence process is typically 45 to 60 days.
Ah, nice.
So the pathway to exit is quite slow. You've got probably 45 to 90 days in matching. You've then got the negotiation process, which is a combination of the letter of intent plus the asset and or stock purchase agreement. You've then got diligence. And then finally, you've got the asset transfer and release of funds. So all in, depending on the size of the asset, you could be looking at an exit process that runs between 6 months and almost up to a year.
Wow. That's quite a long way, but it makes sense, especially the larger the investment, the more scrutiny it's going to go under because obviously you're investing in this asset and this brand. Do you happen to know like what percent of deals actually go through versus which fall through generally when you're trying to sell a brand? I doubt it's 100%.
Yeah, two stats for you. So the entire marketplace, and of course that does include assets in addition to e-commerce businesses, YouTube channels, blogs, iOS, Android apps, SaaS businesses, etc. So they're all on there. But across the board, it's a 45% conversion rate on the
Oh,
entire
okay.
marketplace. As it relates to deals that fall over, that's a slightly different stat. So 77% of deals go through post
Oh,
LOI.
wow.
So
Okay.
what it is, an LOI will get submitted, and in 23% of the occasions, there is a deal. It will fall over, and that it can fall over for any number of reasons. Most commonly, it's diligence, right? So there's something about the business that is discovered through the diligence period that, for whatever reason, is not liked by the acquirer, or you do get entrepreneurs who get cold feet,
Mm.
and they'll suddenly say, okay, the $1 million check sounds great. But I actually think I've got a breath of, I've got a, I've got a wind here. I'm excited. I think I can continue on. I want another 3 years in this thing.
Mm.
Uh, or they might say, oh, I think there's another buyer just around the corner who's got a bigger check. Now, generally speaking, the the first best offer you see is the best offer you'll ever see.
Oh,
Uh, so I think entrepreneurs do sometimes make some mistakes around that, but at the end of the day, we can't force someone to sell a company.
yeah, of course. What so you mentioned earlier like you'll help them with the due diligence, you'll get them through. Can you give me a couple scenarios where maybe an e-commerce business said, "Hey, we're ready to sell," and they entered everything in the platform, and you guys were like, "You guys aren't ready to sell. You need to work on, these things." Like what would some of those things be?
That happens a lot. I mean, if your revenue profile is on a downward spiral,
Mm,
um, we're going to highly encourage you not to pursue an exit. Sometimes you do get sellers who say, look, at the end of the day, I'll take anything. This business has great bones,
mm,
but I've neglected it because I'm working on something else, or I've neglected it because something has happened personally, and I want to exit it to the best buyer available to me. But ultimately, we will encourage that person to attempt to turn around the revenue profile of the business. So that would be sort of most common example number one. Example number two would be where um, the business profile is impacted by some kind of macroeconomic headwinds. So at the moment, there's a lot of debt laden businesses. Those businesses have taken growth capital. The growth capital has come from a Stripe or a PayPal or a Clearco or even a Facebook, um, Shopify, even. And now that business can't carry the debt as a function of the cost of that debt.
mm,
And so therefore, you're actually expecting a buyer to take on, at least in the case of a share sale, a substantial liability in the business. And we therefore will try to encourage the entrepreneur to try to renegotiate with the lender to get the debt profile into a healthier state. Um, Sometimes it will be that um, there is a fundamental issue with the continued operations of the business. So, for example, let's say you were selling a sunscreen wipe product
mm,
on Amazon, and let's say that it had been proven that sunscreen wipes weren't as effective as you first thought,
mm,
and that the FTC will not allow you to retail a sunscreen wipe and call it a sunscreen wipe, but you've been doing so for 3 years.
mm,
You now sell that product. Flippa does its basic level of research and establishes that that is a business that does have a going concern, but that the viability of it is threatening the acquirer's continued operations. We would again encourage you not to go and try to exit that business. So they're, I guess, three scenarios.
Yeah, those are pretty deep, and a lot of it makes sense too. Like financially, you want to make sure the finances are in place. Change in regulation, the product positioning. Like obviously, if you can't sell sunscreen wipes anymore, it doesn't really make sense to pursue it that way. Um, this was really helpful. Was there anything that I left out that you might want to add to any e-commerce businesses who are considering selling or what they might need to know before they sell. And then next, we'll talk a bit about Flipper and what makes you guys unique.
Yeah, the only thing I would encourage people to do is go and check out the Flipper Data Insights. It's free and it will give you some sense of what buyers are looking for, both multiples, revenue and profit multiples. But better than that, there has been a very substantial spike over the last 3 months. I would say a re, kind of the market for e-commerce has come back hard in a
Hmm.
positive. So if you go and look at data insights, you'll see that the most commonly searched for assets on Flippa right now are D2C Shopify assets and Amazon assets. And of course, that feels similar to some of the froth that was in the market back in 2021. Nowhere near as high as that. I'm not suggesting that multiples are as high as that, but at least the interest and the intent from buyers and investors is there.
That's pretty interesting. That's really good to know too for any of our e-commerce business. And it makes sense coming off of COVID. A lot of businesses thought consumer behavior completely shifted. It has shifted back, but a lot of habits persist. I know personally, I'm doing a lot of Christmas shopping online, and I'm sure a lot of people in my generation are. So it's certainly not going anywhere, and it's just going to continue to grow. On that note, I want to talk about Flippa. It's specifically, you guys use AI. You talk me through your process, really organized on how you vet out a lot of connections, which make it a lot easier for not only you to vet out the business, but to present a business in the best light to potential buyers. And you support over 2 million users globally. How does the platform adapt to meet the needs of a diverse seller, from small e-commerce entrepreneurs to institutional investors?
So the data integrations are really critical. The valuation and our ability to benchmark against historical and historical sales and comps is really critical. The matching algorithm is super strategic for us and helps speed up deal making, which obviously is in the interest of both entrepreneur and investor. The integrated nature of the platform and the end-to-end M&A capability ensures frictionless sales. Now, of course, you want some friction in an M&A process because there's legal frameworks, there's governance and compliance, etc. But ultimately, you've got an end-to-end feature set, and so from integrated legals to even M&A insurance. So right now on the platform, we have the first ever subscale reps and warranties M&A insurance product built into the platform. So an investor for 1% of the enterprise value can now take out insurance and protect their investment. And an entrepreneur can also protect their check against false disclosure or non-disclosure. So you go and sell your assets for $1 million. You go and take out insurance on that check to ensure that in the event that something was discovered post-acquisition, that you are protected as well. So we've got an end-to-end platform, and that is really what sets us apart from anyone else. The fact that you can complete a deal in the quickest possible time, tapping into the largest buying universe on earth, and then use the feature set within the platform to construct a deal and get that deal done.
That is amazing. And the insurance too, like talk about almost a note like a ease of mind because I've seen some of these businesses go through the process and we've had to provide data for due diligence and it's a stressful time, it's just a stressful time, a lot of negotiation. So that's a really interesting concept. And on that note too, so you support, oh, excuse me. Flip is often called the investment bank for the 99%. Can you explain what that means and how Flippa is democratizing access to buying and selling e-commerce businesses?
Yeah, so people get caught up in the front covers of Fortune, Forbes, and articles on TechCrunch. And the reality is that 99, in fact, it's probably 99.9%, but 99% of businesses will never achieve lower or middle market status. They will not generate in excess of $10 million in revenue. So that's 99% of businesses. 99% of American businesses will not meet the $10 million revenue hurdle.
Wow.
So we represent the 99% of businesses in the world who trade in what we might call Main Street or subscale. And that simply for us is about giving liquidity and options to exit to more people around the world, where otherwise the opportunity to exit has been reserved for a small few. In fact, the 1%.
Hmm. That is so cool. I didn't realize that too. Oh, man, only 1% get into that eight-figure category. That's insane. I thought it would be a lot higher, to be honest with you. But
Uh,
maybe I've just been really fortunate to work with some really great businesses.
yeah, you're really fortunate. I mean, 25 million businesses in the US, approximately 4 to 5 million new starts a year, and less than 1% will get to a $10 million revenue hurdle.
Wow, that is interesting. Well, on that note, it's been great chatting with you, Blake, and I'd like to just pick your brain on the future of e-commerce and technology. We have a tradition here, and I like to ask the great minds that come on our show what they think some of the changes that relate to the category that they operate in. So I'm ask you to pull out your crystal ball and looking at the future, how do you see the online business of M&A space evolving, and what opportunities does it create for e-commerce sellers?
So I think the biggest evolution will clearly be what everyone else is going to say, and that's in answer to this same question, which is AI. And it sounds a bit of a cop out, but at the end of the day, I think that AI will make valuations more accurate.
Hmm.
AI will make creating a confidential information memorandum better, more accurate, seamless, and faster. AI, as we've already spoken about, drives matching here at Flippa, and I think the ability to source buyers programmatically for an entrepreneur will drive a great deal of efficiency. AI will assist in the creation of contracts which meet the needs of both parties. I think that there is just such a fundamental shift in the way in which M&A, at least at the subscale level, will change as a function of AI dynamics. Of course, that will take some time to infiltrate the
Hmm.
lower end market and enterprise level M&A environments, just because of bureaucracy, politics, and perhaps the egos of some of the bankers around. But uh, ultimately, I think it will substantially change M&A for the better and help entrepreneurs exit faster.
Well, that's no surprise that AI is shaking up the game. And to be honest with you, Blake, most guests on the show are talking about some aspects of AI. It's hard to believe it's what, 2 years old, and it's had the impact on my business, as I'm sure many other businesses across the world. I want to give a big shout out. Thank you for coming on the show and sharing your invaluable insights and expertise. It's been a pleasure having you on the show. Before we wrap up, could you let our listeners know where they can find you, and if there's anything else you'd like to share that you're working on?
Yeah, if you've heard me on this podcast, I'd love to connect with you on LinkedIn. So just connect, say hello, let me know that you heard me on this particular podcast. Speaking with you, Will. So that is the best way to find me. That's where I'm most active and love to communicate with the community. Yeah, and as it relates to stuff that we're working on, we've got a very big announcement. We're just about to launch our investment product. So at the moment, Flippa is buy and sell, and soon Flippa will be buy, sell, raise, and invest, which means
Wow.
that great quality e-commerce businesses can tap into our accredited investor network in excess of 77,000 accredited investors to tap into growth capital. So equity-based rounds into small, good quality businesses, so those business owners can go on and build bigger businesses, and then ultimately come back to the platform when that time to exit is best for them. So that's a significant announcement, and keep an eye on that.
And congratulations. That's an amazing move. And I work with a lot of entrepreneurs who are in the fundraising game. It's just part of how they operate their business. So that's crazy. You guys are really incorporating a lot in terms of buying, selling, raising, and growing. So really excited to hear what you're working on in the future. And for all listeners, just so you know, I have links inside the show notes. So wherever you're tuning in, as long as you're not operating a vehicle, click on the show notes and be sure to check out Blake on LinkedIn, check out Flippa, the website, and we'll have the resources in there. Blake, thanks so much for joining us. Have a great rest of your day.
Thank you, Will.
Thanks for joining us on this episode of Selling on Giants. I hope you're walking away with valuable strategies for scaling, selling, and positioning your e-commerce business for maximum success. A huge thanks to Blake Hutchison for sharing his expertise and for Flippa's commitment to democratizing online business investments. If you're thinking about buying or selling an online business, check out flippa.com. And as always, if you've enjoyed today's conversation, make sure to follow, subscribe, and leave a review on your favorite streaming platform. Stay tuned for more insights to help you grow your e-commerce business. See you next time on Selling on Giants.